How are
Thank
you,
you
Lynette? Yeah, of
very
course.
much. Wonderful to be here today.
Well, it is an honor and a pleasure to meet you. I chatted you up a little bit, and I've already probably inflated your ego before the before the video. But so I talk about economics on my show. I talk about a lot of things on my show: health, economics, politics. But there's big stuff in the market. The reset is coming. I think everybody they feel something. People may not know what's going to happen. They may not know how to follow these things. And I've got some questions for you, but if you don't mind, I'm just going to jump into the list. All right.
Go right ahead.
Okay. So first of all, the physical markets. And people have been buying gold and silver for so long. I'm one of them, waiting on things to turn, always promising that things are about to happen, and it never does. And we know, who are in the market, that the big guys are playing with the ETFs and the paper markets, and they're just squashing the price with manipulation.
Right.
One of the things I want to ask, on a personal note and for others, is how long that can hold, and are there any signs of it cracking?
Well, it can definitely last a lot longer than anybody would anticipate that it could, because after all, when they don't like the way the rules are working, they simply change how they account for things. So it's really hard to say exactly when that part of the manipulation will stop, because you can even look down at Venezuela, and on the normal market, the price of gold was exploding and has been really since 2013. But the official price of gold was held down until February 7th. And this is the piece that people need to remember. Okay, number one, all in due time, just not necessarily mine. But at some point, that is actually how the reset is performed, is by revaluing the fiat currency against gold money. So bullion or monetary gold. So it will last until they either lose control of it, because we've certainly witnessed that in 2008 when you saw the paper markets plunging in both the spot gold market went down like 32% during the crisis, and the mining stocks also plunged. But in the physical only market, which is not visible if all you're watching is the computer or the TV, then we saw those actually, the physical markets, there was scarcity, so you couldn't get your hands on stuff. I mean, I remember having to wait 3 months for delivery. This time, I don't think we're going to have that option to wait 3 months for delivery, frankly, because so much of the physical gold and silver has already been pulled off the market, and it's not coming back on by anybody that really understands what's happening. But I can tell you, for the collectible market, that's when those coins made this trend high, was as those paper markets were plunging. So, they'll continue to do that as long as it serves their purpose to keep you away from participating in the gold and silver market. Paper, they don't care so much if you do ETFs, because that's just a contract to a trust. It's not actually the physical metal. It's only the guys at the top of that food chain, like a JP Morgan, that can take physical delivery of the gold or the silver that's inside of ETFs. You or I could not do that. We're not authorized. So they can manipulate the market in so many different ways, so cheaply, that, yeah, they can keep this up for a while. It doesn't mean that on the physical market you'd actually be able to buy it, though, because it's that scarcity piece in the physical market. If the wholesalers have a hard time getting it, they're going to charge you a premium, regardless of what the spot price says. And we know that even just from 2008, and even more recently, we had some delays in delivery. So
I remember I remember the premiums. I remember the long wait times. I'm hearing now from people in the industry that it's getting a little bit more scarce. And you know, we've heard the statistics that silver is running out. What's your take on that?
Well, it is, because it actually gets used up in industry, and silver is also a byproduct. You know, so they don't actually go and mine specifically for silver. Silver is more of a byproduct. So yeah, it is getting used up, and it's used across the entire global economic spectrum, as is gold. But the difference between the two is gold, while it's used across the economic spectrum, that doesn't get used up. So it's a better tool for accounting, which is why they revalue the currency against gold and not silver. But both of them are monetary metals, and both of them, there is a finite amount of it, period, end of discussion. Even with a new find of some, you know, gold hoard somewhere, there's only so much of it as compared to any of these digital or fiat money products, which are frankly unlimited, because that's a button push on a computer.
So you mentioned Venezuela, and I know that I'm a silver guy more than a gold guy, but I like the, you know,
I like both.
the ratio. Yeah, I was going to ask, but I like the ratio. You know, I think it's like 80-1 or something right now. Historically, it was, I think it's 16-1, right? So in Venezuela, gold actually did better during the reset, at least when I heard a while back. And I kind of expected silver would do better. And I guess that was more gold's reputation as money than anything. But what do you think? Obviously, the physical markets are shrinking, but what do you think is going to happen in the US? Will it be gold that benefits the most?
Well, I mean, historically, that's what supported, not just in Venezuela, but I recently did a piece, and we saw the same kind of behavior in Germany's hyperinflation in the 20s. So, and that's because the reset occurs against gold. Having said that, keep in mind, for me, I don't really care so much about that, you know, gold to silver ratio, because mentally people are thinking about it like a trade. Oh, well, silver is going to go up a whole lot more in terms of fiat. But the reality is when this happens, when it becomes visible to everybody that we're in a hyperinflationary event, both gold and silver will hold your purchasing power. So for me, it's about functionality. What is it that I want to accomplish? And silver is, for me, about barterability, simply because if I want to buy a pint of strawberries, I don't want to take a gold coin in there. You can carry a lot more wealth in a small package with gold, but change becomes irrelevant. So I want to go in with a pre-64 dime, which is, you know, roughly, not quite, but a tenth of an ounce, or a quarter, or a half an ounce, or an ounce, depending upon what I want to purchase or convert that silver into. That for me is the function of silver. And speaking about what happened with Venezuela or Germany or any of those other places where during the reset and hyperinflation, at some point there is a division between the performance of gold or silver. If you have enough barterable gold, or if you have any gold, you will, chances are, I mean, I can't guarantee this, but chances are, because this has been true 100% of the time, you can always convert your gold into silver at that time so that you have more of it. So you want a certain level of silver going into it, because for a while it maintains and probably shrinks that ratio. But and part of the strategy that I developed, just based upon repeatable patterns that we execute here, really, if you have your barterable gold, then when that division happens and gold starts to outperform in terms of fiat anyway, silver, well, you can always just convert small pieces of gold into the silver, so that in reality, you are now getting the same level of purchasing power. You're not losing it with the silver. But understand this too, part of the strategy, you want cash as well that is completely outside of the system, because for people, that's the most recognizable money at this point. So even though we know it's going to lose all value, you still have to have a certain level of that for the initial hyperinflationary push. Then you want the silver for that next push, and then you want some of the barterable gold that you can convert into the silver, which is more easily usable for your day-to-day purchases, and then you won't experience that big discrepancy. Did that make sense? It was a little complicated.
No, yeah, it did.
Okay.
As you were talking about it, hyperinflation and such, and I want to get into that. I remember seeing the images that circled really widely from Venezuela. It's like a plate of chicken or a piece, a loaf of bread, and it's a stack of cash on a table to be able to buy it. And
exactly.
It's pretty wild.